What's good, boys? Back for video 2. Last video, I hope you watched it already. We went over basically what a chart is, the different time frames when you should be trading, 9:30 open, um, the basic trends, and just what it all is. So I'm gonna have Jed break down to you what the
All right.
liquidity is.
So yeah, we were going through we were going over like structure, like basic trends last time we went over, uptrends, downtrends. Now let's do support and resistance. Basic a way I could explain it to. I'll get a little more in depth. This is that consolidation I was showing you. There's a fucking support line right here.
Just looks
Oh
good.
wow. Oh wow, right? Crazy. That market is bouncing on a support line. Ready? Look.
Bounce on that shit.
Bang. Again. I mean, the support. There's support when market comes down here. There's support. It pumps back up, and there's resistance here. When market's consolidating like that, it's trading in between support and resistance levels. Yeah. A little more into that is liquidity. So liquidity is basically where the money is resting. So at the top of like these big wicks right here, market bought up, and now there's just a shit ton of sell orders to sell it down, right? So that means all these sell orders are safe. I mean, they're protected at the moment, right? They haven't got ran. The banks don't like that. JP Morgan, he says fuck that, right? Not actually, but liquidity always gets swept, right? So the highs and lows always get taken out. It might take,
Can I show him an
5, 6,
example?
7 hours.
Let me show him an example.
Go ahead.
So I'm showing you this downtrend again. I hope you remember it from last video. You see how it makes these highs right here? Let me mark it out for you. 1, 2, and 3. These highs, they're all resting liquidity. Guess what happens after? Look at this shit. You see that shit? Sweeps all of it.
So all of these are liquidity. So, I mean, if I were to go into repay mode right here, cut this, right? Sorry, it's taking a second to load. All right, bang. So, right, we're in a downtrend, right? Obviously, I'm not trading against the downtrend until anything happens, right? I need confirmation. We'll get into that. That's where strategy comes into play, where you know when to enter and all stuff like that. But right now, I'm just looking at targets above. So I have liquidity above. And, I mean, I don't really want to do all this right now, but I would assume down here, farther down the chart over here, there'll be liquidity levels
There's
here,
more
right?
liquidity.
So
It's everywhere.
again, there's no entries here because that's where strategy comes into play. Are we going to keep pushing down? We don't know. Are we going to go back up and take these out? We don't know.
But based off what we just told you guys about liquidity, what does the market like to do?
It likes to go toward it.
The
So
market-
we know, right? Sorry, my
The
apologies.
market likes to fucking take out the liquidity because people have their orders at those places and they just want to get them all dead. So play this out and let's see what
So we have resting orders above and resting orders below. Pretty simple. We know market's going one direction or the other. It's not going to chop, right? We're going to take out liquidity.
See what happens.
Yeah, exactly. I mean,
Oh shit. Oh,
liquidity gets ran.
simple. Holy shit.
All right, let me just exit this shit real quick.
Get out of here. Should we show them what a fair value gap is this video?
Yeah.
Yeah, we'll
You
show
can hop
you
on
guys.
that. Let me go a little bit more into liquidity real quick. So another thing about liquidity is levels. So session highs and lows, and another thing, a big thing, is 4-hour highs and lows. So right here, I mean, pretty simple. What are our sessions? London, New York, Asia. We got Asia highs. Bang. It's the high of the Asia. We got Asia lows. Bang. It's the low of the Asia.
They both get swept.
Like I said, London's fucking bullshit, so we just consolidate all it. Around here, you can see the time frame at the bottom, 9:30. New York market open, big market. Bang, sweeps liquidity. Bang, sweeps liquidity. I mean, we're going to take it all.
Holy shit.
Yeah, so another thing for like 4-hour highs and lows is like if you were in a trade here and whatever, markets, you came down.
You don't know what's going on. Right?
Yeah, well, I'll give them a little sauce here. Bang, this is the liquidity level, right? Market came down and swept the liquidity level. So that means it just canceled all these orders. A lot of the time when market does make reverses, it is at liquidity levels. So market slept liquidity, it's making an upwards formation. What would be a target or a TP?
Liquidity
Your
level.
next liquidity level. So this is also a 4-hour high, higher the time frame, higher the value essentially. So yeah, if you were to enter an order here, and you would just target the next liquidity level.
Let's see. Oh my gosh,
Bang.
it hit it.
Yeah, that's really simple. Yeah, if you want to give a little fair value gaps. This is not something we use to trade with, but it is just a very important
to know.
basic.
Like, if
thing
you don't
to
know
know.
this, you're a do
Yeah,
not.
yeah.
So, boom. One of the most basic things in a trading chart, it's called the fair value gap. It's basically when there's three candlesticks in a row in the same direction and they create a gap. So, let me show you this. How do I get to the? Is there a box in here? There's a rectangle. You see right here, boom, it starts going up, and it's this, and then it's this one, and they create the gap within the market.
Yeah.
So you draw that out as a box. They call this the fair value gap. Price likes it tends to test this box, and if it's valid, it'll react and keep moving with the trend. So it'll kind of help you with an uptrend or even if it's a downtrend. So this would be a bullish fair value gap since the price is going upwards when the gap was created between the wicks. And as you can see, yeah, I'll show them in a second. As you can see, the price taps into the fair value gap and it's very respected. And boom, immediately the price bounces off and creates a new high. Boom, it comes back down. No candle even closes down here. It's just a little wick in here. And boom, it sweeps up, sweeps liquidity, and bang.
Let me say one thing. So you like I was just talking about liquidity before. It's almost like the fair value gaps can be worked as those rejection zones that I was talking about in the consolidation before. It's like this is a valid. There's a gap in the market because there's so many people buying orders, so the market jumped. So a fair value gap would be that price is a fair currently at that time. It's a fair value to buy the stock or the index or whatever you're trading. So when market comes back down to the fair value, a lot of orders get filled, and then if it's a fair value in a bullish gap, markets are going to continue up.
And then, should I show them on the flip side?
Yeah, show them in the same trend.
Yeah, but before that, there's also something called the inverse fair value gap. Well, this might be too in depth for you pussies.
Yeah, wait. Let me show them with something more simple first.
Oh, okay.
Sorry. So it's moving up, right? Comes back down, respected, and we get this. Why we know it's not going to come back down and just rip through this is we get this confirmation again when we form a bearish fair value gap in a bullish trend that gets
inversed.
Yeah. So now we are respecting the bullish one, right? So it's coming down using it, and we are disrespecting the bearish one.
That's kind of what I was going to show them.
Yeah, over there, it's the same thing.
This is that creates a bearish fair value gap here, right? As you can see, it creates the bearish fair value gap right here. And boom. Whoa. How do I delete this? There we go. It creates the bearish fair value gap here, and as you can see, the price closes above it. Once that happens, the fair value gap is invalid. Right there, as you can see, invalid. Boom. Well, both of the fair value gaps, invalid.
They are technically different. So where the ICT, which is like the most basic concept of trading strategy, comes into play is when a bearish gap gets disrespected and you're in a higher time frame uptrend.
You want to push up.
You can assume that market is going to continue to the next liquidity point. So liquidity comes into play. These gaps come into play, even though there's way more better strategies than just entering because a gap got inversed. You know,
that's like day one.
Yeah, a lot of the times gaps get inversed and market just doesn't care.
Yeah, agreed. Especially since we talked about lower time frames yesterday. Usually the higher time frame fair value gaps like to hold up better than the lower time frame fair value gaps since they hold more value. Like that's kind of why we're always in an uptrend. If you really think about it, the NASDAQ always goes up, man.
So I'll show you here on like the 3-minute why, those fair value gaps aren't always the best. For example, right here, right? We're pulling back up.
Bearish fair value pulling that up, right? Disrespected, and then it dumps after.
Yeah. So you get that little gap right there. So fair value gap, right? And they're like, oh, it got disrespected. So
let's go up.
Let's buy long right here, right? And, target back up to where you're going. No, you get that small little push up, maybe you're good. But then and that's where we get into even more depth, where it's like, why would you be trading if we haven't slept liquidity?
All the above.
So price always wants to deliver after sweeping liquidity. There's a lot gets into it, but I really just want you guys to get I'm just giving this free sauce.
Keep it stupid simple. That's all it is. And I mean, the last thing we wanted to touch on in this video was the news events like CPI, PPI, all that. Usually, me personally, when I know a big news event like that is coming out, I don't like to look at the charts because I consider it gambling. It fucks everything up. But if you want to learn more about it, some people actually trade that.
I'll show you an example. Today
there was fat news.
Yeah,
today.
so at 8:30 there was a news event, right? So market's not open, so it's just shopping. Asia session happened, London session happened, and New York,
right there.
New York happened. Yeah, I know. I'm sure. And New York doesn't open until 9:30, right? So in this little dead area right here, there was a news event at 8:30. Look at this candle right here, the 8:30 candle when the news came out.
It's way bigger than the other.
Yeah,
news.
So when we say news, we don't mean a tweet or something like that. We mean scheduled dates by the government when they announce public information. So whether that's CPI, where it's consumer price index, how much the world is consuming, numbers that don't really fucking matter.
Inflation.
Yeah, if you're gonna trade them, go watch another video. You're gambling. There's no point on that. But yeah, if you look at your calendar and you see that there's a news date, stay away because they fuck up every algorithm that is known to man.
But shit, is that all?
Yeah, that's about it. One more little thing is you want to be on your computer at 9:30 market open. Doesn't necessarily mean you have to be trading. It's perfectly fine to wait 15, 20, an hour. You can wait till 10 o'clock. You don't need to be in a trade right at market open. That's the time where stuff is happening, and if you are able to capitalize based off your good enough strategy on the stuff that's happening, you can make a lot of money.
90% of trading is mental, fellas. As long as you can keep yourself calm, you'll be better off.
100%. I love that. We'll get a little bit more into mental in some of the other videos, but we'll catch you.